Hi fellow option traders, this is Jeff and welcome to, let's see, what should I call this? IV got you down? Maybe I'll call it that. To this video on IV got you down, where IV is low and can you really, we're 12.74 on the VIX. Holy cow, that's all I got to say. That is low. And what do? You could do some credit spreads, but you have to get so close to being in the money and you might get a big move and it would take you out and you'd suffer maximum loss in a matter of moments. Probably not a thing that excites a lot of people. But on the other hand, there are some stocks, and MasterCard is one of them. Let's take a look at the chart here. As I mentioned in this morning's video, that is just kind of moving sideways. And to try and do a credit spread on either side of this, which way do you think it's going to go? Well, maybe you could do an iron condor. Well, let's take a look at an iron condor on this particular trade. Something that's kind of safe, right? We'll look for something with a delta around 20. Okay. So we have a delta around 20 on the put side and a delta around 20. This is 18, 20, I don't know which way to go here. We'll pick that one, the delta of 24. And we can see that we have it's not too bad, $157 in credit for $343 in risk. Approximately 2-to-1 risk to reward, approximately. That's not too bad. That's not bad at all, I guess. I was wrong this morning. You could probably even stretch this out a little bit more. You're looking at break-evens around 500 and 540. So we're looking here at 540 and down here at 500. And that is for a March expiration, which is how many days out? 29 days. Alright, that's kind of far out, but it's not an impossible thing. And that's not a bad trade either. But let's take a look at a calendar trade. Maybe even around the same strikes. Let's move up one strike to 505 and we'll buy a calendar and move up one strike here to 535 and say buy a calendar. And we'll take a look at that risk profile. Now that looks like the old-fashioned tent that I used to do all the time, right? Okay, so I unchecked the iron condor here and take a look at this calendar. We have a break even at 498 and 541, which is not too far off from the break evens. Let's go back here. Let's put our break evens in here. Set slices to break even on 316, and then we'll shut that off and turn this on and see our break evens are almost exactly the same. Now we're talking about about the same amount of profit if the price ends up either at this peak or at this peak, which is where basically the shorts are. The shorts are at 505 for the month of March, and the longs are in the month of April. So we're talking about the same amount of profit there. You know, the iron condor looks a little bit better here. My only concern is how long you have to wait. So let's take a look at aging this a little bit here. We will come down here to our positions in simulated trade so we can mess around with this simulated trade a little bit. And today is the 14th. Happy Valentine's Day, by the way. Let's go up to the 28th. And we'll reset our slices. After 2 weeks, if you're right in the sweet spot or so, you're up about $57 on this. And an increase in volatility is going to, it's going to put pressure on this white line to come down a little bit, which will just take you longer to realize a profit on this, provided the price stays the same. But if volatility is changing significantly, you can pretty much figure that price is probably dropping, even on MasterCard. So what else do we have here? We can tinker with volatility a little bit, and I'll show you what happens here. We click this wrench here, and we'll say let's adjust volatility, and let's bring it up 10. So that drops our white line. Our profit is still up here, but it's just going to take us longer. Remember, we're 2 weeks out here, so it's going to take us longer to get up to the max profit. This is at expiration, the red line. So it's going to take longer. So let's reset this back to 0. And let's take a look at the calendar. So now in the calendar, actually in that period, same period of time, provided it's still in the sweet spot, actually is worth more in 2 weeks than they are in Condor would, provided everything has to remain the same. The price has to be exactly here at 521 in order to do that. But watch what happens when we increase volatility, if we increase it 10 like we did on the other trade. Well, look what we have here. If volatility increases by 10, we have what's starting to look like a very nice trade. The price starts moving down a little bit. And the reason for that is the near month short option increases in value, but so does the far month option, which is the long option, also increases in value and even more. So now your trade is worth a heck of a lot more. Of course, it's going to cost you more to buy your short back, but if you sell your long at the same time, you're going to make some nice money on that. So this is a very nice trade if you think that MasterCard might be moving down, or that market volatility may increase in the next, how many days do we say? 29 days. So that would be a nice trade because of that. But if volatility decreases, it won't go down 10 because we're at, if volatility decreases, then you have a loser on your hands. And you can see that it gets pretty ugly. But volatility is not going to decrease that much because we're only at 19 here anyway. So it might be, if it drops, it might be a 1 or 2%. And really, if it increases, it might be 2 or 3%. And let's put 3 in here. And still, even 3% helps us trade a little bit more too. 5% helps it also. Now we're up to 400 and some. 6%. Well, that's interest. What am I doing here? I'm sorry. My mistake. Let's drop volatility 5%. Oh, I went plus. Let's see here. -5. Okay. At -5% volatility, we're now down to like 11 or 14 and 13% volatility. Probably not going to happen. But it would turn this trade into a loser. But an increase in volatility of just 3%. Oops, -3. I want to do +3. Turns this into a sweet little trade. And that's what is attractive with the calendar. And because of that, you know the price is going to be moving down. You may want to drop your put side a little bit more and bring it down to, can't see this. Bring your put side down to 500, or maybe even 495. Let's reset the parameters and see what it looks like here. Alright, so we're not going to make any money if it stays here, but if it drops down or if it moves up. And we have a lot of nice room here. This is one standard deviation here based on this current price. So this highlighted section here is one standard deviation. So this would give you lots of room to the downside, not so much to the upside, but you're playing a volatility to the downside. The only bad thing is that this trade is going to cost about $1,000 or so. So we're talking about $411 for the put side and $510 for the call side on this calendar that you have to put up. But you're not really going to lose any money effectively to take this type of a trade and make this kind of a bet. Because as I said, when volatility starts to increase, and we'll just do it in 1/10 steps here, just 1%. Now it's a winning trade anywhere within that, in between these break evens here. We'll set slices to break even, and let's do it to charts. We'll take a look at this. This is MasterCard. This is an hourly chart. Let's go to a day chart and zoom out. So these are your break-evens here on your trade. So it's not a bad trade at all. It's going to cost $1,000, but it looks like a really attractive trade, and I may do this in my conservative account in the Profit Tent portfolio, because this will help the portfolio get the tent-like appearance, and that's what this is. So here's your double calendar for MasterCard. We'll take the Iron Condor off. I like this a little bit better. We'll reset our parameters. This particular trade is probably not going to lose any money on it unless volatility decreases. But can it get any lower than 12.78 here on the VIX? And you know, we're talking 20% and 15% overall on these particular options that we're thinking of getting in on. I don't know how you can do that much better. So I'm liking this trade, and I think I'm going to go and do it in my Profit Tent portfolio. So we'll go over here, and this is it. I'm going to be truthful here. You know, I'm going to actually execute this trade and put it out there and see how she works. Create duplicate order. If you hit confirm and send, it saves a step, but it takes away your simulated trade. If you want to keep your simulated trade, then you come down here and click on create duplicate order. Excuse me, and then you can probably not, since you're buying, you're probably not going to get mid on that. So we'll raise it up a couple pennies and shoot it out there. We're in on the put side. Now let's do the call side. Right click, create duplicate order, and raise that one up a couple pennies and hit confirm and send. And we're in on that one. Okay, so we are now live. Now I can take these off of here because I don't want to look at them anymore. and we will reset our slices. And we can see that right now we're down about $1.98 on it, and a lot of that is transaction costs, commissions costs. All right, so that's the double calendar that we're doing for MasterCard, and we'll see how this works out. Stay tuned. Don't forget to watch the daily scans, because we'll be looking at this one every day to see how it's doing. Thanks for watching. Have a great day and happy trading.